Hello my fellow investors and welcome back to another very special video. Today guys, I would actually like to show everybody exactly what I am planning to do with store capital. Now for all those of you who may not have seen my previous video on this, I highly suggest you go and check it out. I will go over exactly what's going on with this in just one second, but for this video guys, I would just like to show everybody exactly what I am planning to do once this thing that's happening with store capital actually occurs, and where am I putting this excess money that I am now going to have once it actually goes through. So with that said guys, let's get started with this video. Now for all those of you who may not know what's currently happening with store capital, I highly suggest, well first of all, to go and watch my video on this because I pretty much go a little bit more in depth onto it. But as a quick recap, essentially store capital agrees to be acquired by GIC and Oak Street in an all-cash deal valued at $14 billion. Yes, store capital is getting bought out by a private company, and unfortunately it's actually going private. And it continues on to read, it says, under the terms of the deal, store capital shareholders will receive $32.25 per each share owned, equal to a premium of 20.4 over the stock's closing price on Wednesday and a premium of 17.8 over the 90-day volume weighted average stock price through that date. So essentially guys, it is getting bought out. Once the acquisition actually goes through, everybody's shares is going to get liquidated for that $32.25. And of course, as many of you know, I do own store capital, and in fact it makes a huge portion of my dividend portfolio, currently giving me guys $257.94 in annual dividends. Now luckily for me, even though I will lose this dividend, I am going to get it back in the form of a gain once this acquisition goes through. I'm going to put right now on the screen exactly what I mean. And as you can see, my current position is around 167.49 shares with an average share price that I have bought this at around $30.83. Current total cost that I paid for it is $5,162.95. So basically, because the acquisition is going for $32.25, the fact that my average share price is lower, I'm going to essentially get that difference. But I'm still going to be losing this $257.94 in yearly dividends. I want to now take that money that I'm going to get from the selling of store capital and put it into some other company that will hopefully subsidize this difference. So I made this very quick spreadsheet that pretty much shows me exactly how much in total returns I will get once this acquisition goes through. So as you can see right here guys, ticker symbol of store, current share price of $31.90, with the numbers of shares that I currently have of 167.49211 shares. The average share price, which I have paid, which you guys just saw, is around $30.83. Now the selling price that the company is willing to pay for it is $32.25. This would mean that based on the amount of shares I hold right now, once we do the difference between the selling minus the average times the numbers of shares, I'm actually going to get a gain of around $237.84. So not too bad of a gain. Now, store capital has a dividend per share of 39 cents, which based off of the numbers of shares I have ends up being $65.32 per quarter. And now once this acquisition actually goes through and I wait for the dividend for next month to be paid as well, my total returns is going to be $5,466.11. So that's a whole lot of money that I'm not going to have. So what I was thinking is, okay, I'm going to be losing this dividend income, unfortunately, but I'm going to be losing it. Where can I put it that it will essentially subsidize it? And I kind of want to keep it in the same ballpark as in like keep it in a REIT company. So I was thinking, you know what? Let's actually see how much dividends I would essentially get per quarter if I were to put it into one of my REITs that I currently hold. And as you can see guys, I do own a couple of REITs here and there, right? I own Vici, I own Realty Income, I own DLR, I own CCI, but I was thinking, okay, if I were to put this into one of my favorites, which would be O, right, Realty Income, how much in dividends would I essentially get back? And well, basically, if we come over here and I put the ticker symbol O over there, and remember, they pay out a dividend of 25 cents, this would actually be around $63.75 per quarter. Remember, O pays monthly, but per quarter it will essentially be $63.75, fairly close to what store capital would essentially pay me. With that said, I might actually consider putting this into realty income. So let's actually come back here to my dividends holdings tab, which again, guys, this dividends holdings that I have over here, this dividend tracking sheet, is available for everybody to have. I have a video showing how to actually set it all up. It does require somebody else's macro, so you guys have to finagle that one out, but if you do get it working, it's essentially really good. So let's actually begin with, of course, actually running this macro. Let's see if anything has actually changed when it comes to any dividends. Because remember, before it was $3,802.44 in annual dividends. And now that the macro is running, we can see everything just updating really quickly. And we can actually see that we did get a little bit of an increase here in dividends by a couple pennies. So it wasn't too much, but it was still fairly good. Now, I want to see what the effects of taking out this annual dividends from store into this, how much it would affect. So I'm actually going to write this down over here, $3,802.61. I'm just going to keep that right there just so that way I can have it there. And then I'm going to come over here and I'm going to subtract this $257 from store capital right over here. This would essentially become $3,554.67. So went down by a pretty big chunk, guys. But now let's actually say that I take that whole entire cash acquisition, right, that I'm essentially going to get once this thing actually goes through, plus next month's dividend, and I put it all into realty income. Now I have this calculator set up so that once I put it in here, it would essentially get placed into here. So it's actually going to tell me how much in my projected annual dividends I will get. So remember that the total returns would be $5,466.11. So if we come over here and put $5,466.11 into realty income, well, you can see right here that now my annual dividends per share, it would be, guys, $4,050.57, which is significantly higher than what I had before of $3,802.61 by what, $200 or so. So that's actually fairly good in my personal opinion. Now, am I planning to do this entirely? The thing is that I do not want to put everything into realty income as a whole, right? Because I don't know, I would like to buy other companies as well. Companies like, for example, that I absolutely love, like Broadcom, which is actually fairly close to sub 500. In fact, it was sub 500 just a couple days ago, but then it's gotten up a little bit. If by the time I can get this money from the acquisition and I find other companies that are essentially at a pretty good value, that I consider a pretty good value, what I might consider doing, guys, is essentially taking enough of this cash so then I keep my $3,802 as of I have today, but I would like to take the rest of it and put it into another company like Broadcom. So in that scenario, obviously things would change depending on what the price for realty income would be, what the price for other companies would be, but that is essentially what I'm planning to do. But as it stands right now, if I were to put, guys, this entire $5,466.11 into realty income, I would be getting an increase in my dividends by more than $200. It's essentially what, $248. That's pretty good, guys, in my personal opinion. So if this happens and I do decide to continue putting in everything into realty income, get ready to see a video of me buying $5,466 of a certain company. Anyways, that pretty much does it for this video. Tell me what you guys are thinking about for this acquisition. What are you guys planning to do? If you hold store, what was your average share price? What are you planning to do once you get this acquisition of $32.25, right? Tell me what you guys think in the comment section below. So that pretty much does it for this video. Liked if you like, comment, subscribe. It really does help it with the algorithm on YouTube. You guys can follow me on my new tech sites, link in the description below. So with that said, peace out, and I will see everybody in the next video.